Morning, everybody. It's Brian. Hope you're doing well today. It is I started to say it's Friday, but it is kind of our Friday. It's Thursday, the 2nd of July, but it's also our Friday because tomorrow is a U.S. bank holiday. So with that, a lot of the news that would typically come out on the first Friday of the month, non-farm payroll, unemployment claims, unemployment rate, that is coming out today in about 28 minutes. So we'll see what that brings to the marketplace. It'll probably bring quite a bit of volatility. With that said, that's a good time to sit on our hands. We don't want to do anything until after that announcement happens, especially forex. I mean, if anything, for forex, it's just a good opportunity to watch your charts and see how how drastically spreads can widen and why we want to stay away from it typically around news events. Especially if you're trading low time frames. If you're trading higher time frames, it's not that impactful. But if you're trading lower time frames, sure, it can stop you out just on spreads widening. So for today, we're not even going to have a look at forex because there's nothing to do there until after this announcement occurs. Once the announcement occurs, what I would expect in forex is, we've got our currencies that are moving. Right now they're all. If we look over here, right now, with the exception of New Zealand, they're all pretty much flat. Everything's flat, waiting for non-farm payroll to occur. If you look at the current ranges on things, I mean, CAD yen 25 pips on an average of 80, Euro USD 60 on an average of 90, US CAD 30 on an average of 100. I mean, that just really illustrates how flat things have been, and waiting for this upcoming announcement to occur in order to find whatever direction that might be, find what we're going to be buying, find what we're going to be selling. So what we'll do is we're going to wait for that announcement to occur, and after the announcement, give it 5 minutes, 4 or 5 minutes, let things return to normal, and then see which currencies are actually moving. And at that point, based on which currencies are moving steeply and rapidly to the stronger side, which currencies are moving steeply and rapidly to the weaker side, we can pair those together, and then we can make that decision around which currency pairing and which direction we want to trade. Don't try to front run the market. It's coming up, and it's just a good idea. And no one knows what's going to come out of this, and I think the expectation is that it's going to be pretty bad. But who knows? Who really knows? And even if it is bad, we've seen the market before react and go like, whatever. Not as bad as we thought it was going to be, so let's just keep rolling this train forward, right? So, that's where we are right now. We're just waiting and seeing what comes of the report, and then after the report, stepping into the market based on what the market is actually doing versus what we think the market should be doing. And that's a huge thing, because in order to find consistency in trading, we have to have consistency in our actions. And when we don't, that's when the wheels come off. When we do things outside of our plan, the wheels come off. That's where the psychology of the mindset really come into play, to be able to recognize and be honest with ourselves intraday. That trade I just took, did it follow the plan? If it's not part of the plan, why am I in it? Maybe I should just close it down right now. The next trade, why am I in this trade? Am I in this trade simply because I lost the last trade and I'm trying to, quote, get it back? Am I in this trade? Maybe it's a counter trend trade and I'm looking for a reversal. Am I looking for that reversal because it came to a key level? Or am I looking at that reversal because I just think the market needs to go back, and I missed the first couple of trades to the downside, so now I'm pissed about missing that short opportunity. So I'm just going to throw some long opportunities and just long trades in there, hoping to get it back. I'm taking revenge on the market. I know it sounds crazy to say that out loud, but these are actions that traders do every day. We do that. So have a plan, stick to the plan. I know I'm a broken record with that. Have a plan, stick to the plan. Have a plan, stick to the plan. But seriously, when you deviate from the plan, that's when the wheels come off. So what is the plan? What's the plan for the day? Well, we talked about it in Forex. We're going to wait for news. We need to wait for that 7:30 new, well, 8:30 Eastern news here in 24 minutes. Let the news come out, see what it's going to do. Same thing in the futures market. We need to wait for regular trading hours to begin. So that'll begin, regular trading hours will begin an hour after the news happens, right? So after the unemployment non-farm report comes out and unemployment claims and unemployment rate comes out, then it'll be about an hour. Then we'll see the regular session begin and go from there. Keep in mind, it's going to be an odd session, right? It's a short week. This is the Friday, so anyone's guess as to what that's going to bring for us. Right now, the S&P is in an upward bias. Look at the 4-hour; it's long. Look at the 30-minute; it's long. So we have a long bias on the S&P. That's telling us that we should be looking for long opportunities. And I say that and I take a deep breath because we're also hitting our head here. 3130 area, right through here up to about 3140 has been a key level of resistance for the S&P. This, and we haven't talked a lot about counter trend trades at all. We've just been talking about, let's have a system where we trade with the direction of the trend, knowing there's going to be times when the trend's going to reverse and we're going to miss out, because in order to trade with the direction of the trend, we have to get confirmations on that direction. So there's going to be times when a reversal occurs and then we don't trade for a couple of days because we're waiting for confirmation of that reversal. With that said, looking at where we are right now, looking at this top edge, between 3130, 3140 up here, if you're looking at counter trend trades, this would be counter trend. Looking at a reversal off of 3130 or 3140 could be a potential play to do something short in the face of this upward trend. Now, I'm not saying, I never say, and anything I ever give here is just, me talking. I'm not telling you go trade this, right? I'm just giving ideas. But that's a counter trend possibility to look at. Trading with the trend, we'd be looking for pullbacks. We'd be looking for pullbacks to key areas, back down here to this 3125, 3120, even as low as 3100, looking for pullbacks, and then going long from there, or looking for breakouts. If we break above 3140, looking for breakouts to go long. That would be trading with the trend, with the direction of the trend. Of course, anything could happen. We've got the news coming up, and the bottom could fall out of this, and or it could just shoot straight up. Who knows? We really don't know what's going to happen post news. But it is possible that the 30-minute could be could change and not be in agreement with the 4-hour by the time that we get to the regular trading hours. But for right now, trading with the trend says we're looking for long trading opportunities, and to do that, we look for pullbacks to key areas and then trade from those, or look for breaks of key areas and trade from there. So do that, and then the other option, obviously the other option is you don't do anything. Hey, it's a holiday week. I got all this news today. I'm just going to sit on the sidelines and not trade. There's nothing wrong with that either. Just because the market's open doesn't mean you have to be sitting here pushing the button. So you really got 3 ways you can approach it. Obviously, as always, approach it with caution, have a stop loss in place, be prepared to be wrong. There's nothing wrong with that. Test it out, see what's happening. Nothing that would stop this market from, blowing through 3140 and heading straight up to 3200. I mean, the power of the Fed's behind it. The power of the Fed compels you. Anyway, so lots going on, lots of decisions to make there. I hesitate, anytime I talk about counter trend stuff, I hesitate to even bring it up because it goes in the face of what we've been talking about with the account challenge here, the small account challenge. But just be aware, there's a lot happening, and we're definitely at a key area over here. We're definitely at a very key area with this top, and the tell-all will be how things react post-news. So for now, sit on your hands. If you're trading with the trend, we're going to look for long opportunities, but just be aware we're kind of hitting a top edge that's been pretty well established and pretty well supported at this top edge over here of resistance between that 31.30 and 31.40. So, all right. Crude. Moving on over here to crude, still looking at long trading opportunities. The 4-hour is up, 30-minute is up as well. So we're in agreement on this. So the bias is long on both of these. So to play a long bias, we could look for pullbacks to key areas like 40, or we could look for breakouts, above kind of a top edge over here. See if we break above this, 40. 35, 40, 36 area and look to go long from there. So trading with that trend, the opportunities would be to look for pullbacks to key areas like big hold numbers here, or breakouts of the top edge that's kind of been established up here yesterday and also previously as well, around 30, 40, 30, 30, 30, 35, 30, 40 area. All right. Over on gold, we're also in this one's actually a mixed bias here. Yesterday's big sell-off in gold kind of threw a wrench in the mix. So we're looking at gold is a mixed bias. We've got the 30-minute that doesn't agree with the 4-hour. So for gold, we would sit on our hands here and let the market do what the market's going to do and come back when we've got an agreement in those biases. All right, so that is pretty much it for those. Going over here to the crypto land, Ethereum, Bitcoin, we're still in a downward bias, so we're still in a short bias on these. I did push through this 229, 230 area on Ethereum yesterday. It did push through that, came up, and then has pulled back down below that key level again. So right now though, and same with Bitcoin, but Bitcoin is above a key level at 90, basically it's 91, 9200 over here. So we'll see what occurs with it, but the bias is still short. So for this, we would still be looking for short trading opportunities until it flips over and crosses above, indicating that we're back in to that long bias. So that's pretty much it. Other news, I've got an EA. I call it an EA. It's a script being coded for TradeStation that I'll start testing probably next week. It should be ready for me today or tomorrow, and then we'll be able to start testing it next week. I'll keep you posted on that. Basically, I'm just automating the strategies that we've been talking about here in class. So we're automating those, and I'm going to apply it to a sim account, a demo account through TradingView, and run it for a while to see if it gives same, maybe better results than what I'm doing with manual trading. And if it's consistent with the entries I'm looking at manually, I'll roll it out for you guys to test as well. That said, if I roll it out for you to test it in a demo account. Please don't test it in a live account. We need to get data on it, and 1 week of testing or 2 weeks of testing isn't going to be enough. I'm obviously going to back test it and optimize it over a period of time. But when I do that, make that available to you guys, I'd want you to test it in a sim or a demo account, so that if there is something that's going outside of the norm, we wouldn't have any real life impact from it, and it would allow us to gather data and make tweaks as needed down the road. So anyway, hopefully that should come through today or tomorrow, and then I can start testing it next week and keep you guys up to date on what it's doing. That'll be running again. It'll be running through TradeStation or through TradingView. Did I say TradeStation earlier? I meant TradingView. So anyway, that's it for now. News in 15 minutes, and then we can get cracking on what's happening in Forex land and see what the day may have in store for us in the futures market post-employment news. And again, never feel pressured by yourself or by anyone else to take a trade. I want to reiterate that. Today we've got like I said, S&P's at some pretty crazy. It's a very key levels, very key tops right now. We don't know what's going to happen. I think common sense says eventually the market's going to fall apart. propped up by freaking air. Anyway, it's gonna fall apart at some point, right? That common sense says that. But how far can it go before it falls apart, right? Remember, Keynesian theory says markets can stay irrational for longer than you can stay solvent. I love that quote because it's so darn real. We can look at things rationally and say this should be happening, that should be happening. That doesn't have to do anything, So the market could certainly just continue higher, and we have to be prepared for that. And if you're not, and you're thinking it's going to top out here, or you're just simply looking at the fact that we're coming into a holiday weekend, don't trade. It's okay. It's okay to just not do anything. Let the news do its thing, and then come back on Monday. That's totally fine. There's nothing wrong with that. So I think it's so important to say that because so many people feel pressure to constantly be pushing that button, and there's a direct and inverse correlation between how often you push that button and your trading account's balance. People seem to think that the more often they push the button, the more opportunities they have, and it's true, but it's the inverse typically happens. The more you're pushing the button, it's typically because you're doing something outside of a plan, and you're being reckless with the trading. And I can say that from experience. Not like I'm not saying I'm human. We've all done the same thing. Anybody that's been in this trading game for any period has done something reckless. So it's important to point that out. It's okay to just stop and move away from it and let the news occur and come back on a regular trading day. So I don't want to beat that to death, and I certainly don't want to put fear. Have everybody go, oh hey, Brian just said that. Don't be fearful. Have a plan to approach the market. We talked about a couple different ways of looking at it. So have that plan. But at the same time, if you're feeling a lot of anxiousness about it, don't trade. It's okay. So anyway, that's it. I just wanted to share that. We talked about key levels. We talked about what we're looking at for the market. We talked about some trade ideas for the S&P and for crude. And for the rest, we're just going to wait and see if we get to key areas and what happens around there post-news. All right. Have a great day, and we'll talk to you soon.